Vanakkam. Today we are going to see a very important circular issued by Reserve Bank of India with reference to IRAC norms. IRAC norms, which is applicable for the statutory audit for the year 25-26. This is a very important circular based on which we are going to discuss today's presentation. Now, I request everyone to please concentrate for this today's program. It's a very important thing based on which you have to do the NPA classification or IRAC norm classification, and this will be very important. The views expressed by here is my views, and for any clear understanding, I request you to refer the RBI circulars and master directions, and I will not be responsible for any wrong classification or wrong interpretation. So with this disclaimer, I want to present today's session on IRAC norms latest version. And what is the NPA expansion? Which one is correct? NPA expansion is non-performing accounts, non-performing auditor, non-performing advances, and non-performing assets. So the answer is D, that is non-performing assets. Those auditors who are not doing the non-performing assets correctly, he will be called as non-performing auditor. And next one is the caution. With the caution, I want to start today's presentation. Non-identification, non-classification, or wrong classification of NPA, the chartered accountant will definitely get notice from Reserve Bank of India. This is the latest thing, and most of the chartered accountants who are not classified the NPA correctly due to some negligence or due to some pressure given by the banks, they have not classified the NPA correctly, and they receive the notice from the Reserve Bank of India. And this is a very serious thing I want to convey to you. Please do the audit correctly and do the classification correctly, and you will be referred to disciplinary proceedings, if any, and if the wrong classification or non-classification of NPA is material by the Reserve Bank of India. Please be careful, and this is the latest directions based on which you have to carry out the IRAC norms working, that is with reference to NPA classification. That is, this is dated 28/11/25, and the master direction is called as RBI Commercial Banks Income Recognition, Asset Classification, Provisioning Directions 2025, and they have issued separate directions for NBFC. They have issued separate directions for the cooperative banks. So we are here going to discuss only about the IRAC norms applicable to commercial banks. And now all the existing IRAC norm circulars have been withdrawn by the Reserve Bank of India, and now they have given this as directions 2025, and they have modified everything on 28/11/2025. If you go to the RBI circular index and if you click November 2025, you will get all those modified directions. So this is a very important date in the banking industry. The date is 28/11/2025. This is a very important date, and this direction comes into effect immediately, and it is applicable to commercial banks other than small finance banks, payment banks, local area banks, and it is applicable to corresponding new banks and State Bank of India. And now for this, the bank has to form a separate approved policy by the board of the bank. And this is a clear instruction given by the RBI in that master directions. And another very important point, they say that policy is there to make provision for standard assets, and it's only minimum. And the bankers, if they want, they can increase the provision based on the risk and stress of the various sectors. This is also another latest applicable directions given to the banks, and bank has to see that there should not be any deterioration in asset quality. This is a very important. After giving the loan, if the property value or has come down, then it is a loss to the bank. So RBI has given a specific direction that there should not be any deterioration in asset quality, and it has to improve the credit risk management system. And also another thing is they were given clear instruction that the repayment of the loan should be realistic. So that means previously there are some unrealistic repayment schedules have been fixed by the banks. Now they say that the realistic repayment schedule should be fixed by the bank based on the cash flow in consultation with the borrowers at the time of granting loans and advances. So it is a clear instruction that the bankers, they have to consult the borrowers, and based on the consultation, based on the funds generated from the project, they have to fix the cash flow. Based on the cash flow arrived, then the realistic repayment schedule has to be fixed. This is a clear instruction they are given. And this is also another very, very important thing. This is also another audit point I want to say that any loans sanctioned on or after 31/12/21, it must contain the due date of the loan. So this is very, very important thing. It must contain the due date of the loan. This is what they say, that because it's an audit point I want to tell once again. Normally, whenever any CC loan is being sanctioned or OD loan is being sanctioned, they say that the loan is for a period for renewable within a period of 1 year. So they never mention the date. So there are a lot of confusions whether this 1 year we have to calculate from the date of sanction, or from the date of sanction given by the zonal office, or from the date they have executed the document, or from the date they have made the disbursement. So this is a clear instruction given by the Reserve Bank of India that the sanction letter must contain and the loan instrument must contain the due date of the loan and the exact due date. And this frequency of repayment should also be clearly mentioned. And if there previously nationalized banks, they will not give the EMI breakup. What is the amount it goes to the principal? What is the amount goes to the interest? Now they say that there should be a clear breakup of principal and interest, because based on that only dates of SMA, special mention account, and NPA account has to be arrived at. So the borrower has to be apprised about this sanction and when they pass the sanction letter. And in case of moratorium loan also, moratorium, gestation, holiday, all are one and the same. When they sanction the moratorium loan also, the moratorium period should also be clearly mentioned in the sanction letter. And any loans that is existing, that is on or after, you have to say that a sanction letter must contain the due date of the loan. It's an audit point. If it is not clearly mentioned in the sanction letter, you have to give this in the LFAR, because in LFAR, there is one column whether the branch has violated or deviated from the RBI directions or circulars. There you can fix, there you can report it. And another very important thing is any loan which is existing before 31/12/21, the due date has to be fixed based on the renewal or review. So at the time of renewal and review, the due date of the loan has to be fixed. And here they have said that sanction of working capital. What is the principle to be followed? This also is there in the master directions. DP has to be arrived at on the basis of the stock statement. So here they say that the DP, drawing power, has to be arrived at based on the stock statement. It is my view there debtor is excluded. So that means there is no need for you to arrive at the DP. This is my view. But few learned charter account, they say that stock statement includes debtor statement. So please refer the sanction letter based on which you have to do the drawing power. Next one is last 3 months stock statement only you have to consider. So suppose we are going for the audit of March 2026, you have to consider the stock statement of February, January, and December. All the 3 stock statements you have to consider. And if the DP is below the outstanding balance, okay. If the outstanding balance exceeds the drawing power for the entire 3 months, then that account has to be treated as NPA. So this is a very, very important directions. They say that you have to consider only 3 months. And this is point number 2. This working has to be done based on the sanction letter, and it has to be done even for the quarter wise. If you are a concurrent auditor, you have to do this for the quarterly basis. And they say that normally when there is a renewal or regularized or ad hoc limit is being given to the borrowers, it should be within 3 months. That is, only 3 months ad hoc has to be allowed from the due date or date of sanction. That means ad hoc limit should be only for 3 months from the date of ad hoc sanction. That means there should not be any further ad hoc sanction the branch has to make to the customers. In case if the banks they want to make a if the bank they want to make a ad hoc sanction, then they have to provide the reasons based on which they are giving the ad hoc sanction. So frequent ad hoc sanction should not be given, and the branch has to capture all the data in core banking system. MIS should be regular, ad hoc, short renewal details to produce the same to the auditors as well as to the Reserve Bank of India. This is a very important thing. That is, all the core banking system should capture all the master records correctly. This is what this master direction implies. And in case of non-availability, sometimes due to the renewal, they want the audited financial statements. At that time, the statements would not have been audited, so it will not be available. That should not be an hindrance to the renewal. So a delay beyond 6 months is considered as general discipline. So if account has to be audited on 31st October 2025, you have to add 6 months, October over. So November, December, January, February, March, April. So delay beyond 6 months has to be considered as general discipline. But this financial statement submission will be clearly mentioned in the sanction letter. Please do the audit based on the financial statements made in the financial statements mentioned in the sanction letter. And non-submission of financial statement will not make that account as NPA. This is a very important point. Non-submission of financial statement will not make the account as NPA, but penal interest has to be charged as per the sanction letter. And another principle, they say that it's an NPA account. The outstanding balance, it's not the sanction. If the outstanding balance is 5 crore and above, a stock audit has to be mandatorily conducted at regular intervals. They never mention the date. So the stock audit, normally it is 1 year. So every year, the stock audit has to be conducted at regular intervals if the outstanding balance is 5 crores and above, and if for NPA account. But for all those standard accounts, the stock audit has to be conducted regularly. But few banks, they are not doing stock audit for the NPA accounts. Here they have given a cutoff point. If it is 5 crore and above, a stock audit has to be conducted compulsorily. And if there is any collateral, collateral is given that to a NPA account. NPA account, there's a collateral. The outstanding balance is 5 crore and above. A valuation has to be conducted by the valuers once in 3 years to be made. It is not the primary security. It's a collateral security. You have to do the valuation once in 3 years. In case of housing loan, the house is the primary security. According to me, there is no need for the bankers to do the valuation if it is an NPA account. But here they mentioned as collateral security. And in case if that primary security is being taken as collateral, then you have to do the valuation once in 3 years. And here also another very important thing they have given to the advocate's opinion. If the advocate has given the opinion wrongly, even the valuers overstate the security value by negligence or connivance, then bank has to get their clarification from the advocate or the valuer. And if there is no proper reply, or if there is no satisfactory clarification is being received within 1 month, then the bankers may refer the name of the advocate, name of the valuer to the IBA, Indian Banking Association. Then IBA, in turn, they will circulate the name of the advocate and name of the valuer to all other banks. That means it should be very dangerous thing. The advocate and the valuer have to give the correct opinion about the document, about the valuation party. And then IBA has to create a central registry for this purpose. This is a very important thing. Then IBA has to create a central registry for this purpose. Then now they say that bank has to classify the loan or advances as a standard or NPA. So either they have to classify that account as standard or NPA. Next one is IT and MIS of bank has to do the same. That is, all the standard working and NPA working have to be clearly mentioned in the bank's IT and MIS. And for this, the bank has to give a clear instruction to the staff, to the bank officials. Then the bank has to classify the stress asset from the angle of EWS, that is early warning signal, and towards the NPA. See, even and I used to say that early warning signal is the raw material, and if there is any fraud due to this, then that is called as red flag account. You can next stage is red flag account. Red flag account is called as the working process, and fraud is the finished product. This is from the fraud angle, but EWS is the starting point towards the NPA if it is a stress asset. Then here they say that bank has to flag the borrower account as overdue as part of its day-end process irrespective of the time of running such process. Here the RBI has come out with a clear instruction saying that there is an account overdue. If the amount has not been paid on such date, then before the day-end process run by the bank, then the overdue starts from the day-end process date. That means an account is overdue before running the day-end process. If the amount is not being paid, then the NPA, that is overdue date starts from the day-end process. So this is a very, very important instruction they have given. And same day, from there, you have to calculate the SMA and NPA. That is a very, very important instruction that is given in the latest circular. And what is meant by special mention account? This is a very, very important area, and chartered accountants have to give a special mention account report, and they have to issue a separate certificate. From last year, few bankers they asked the chartered accountants have to give a special mention account date. So they have to verify and they have to certify that the bankers they have done the working correctly or not with reference to SMA. That means they have to arrive at the overdue date correctly. So before becoming NPA, this exercise has to be done, and closely the bankers they will start to monitor, because it is called a stress asset, because there is an overdue beyond the due date. So definitely bankers they will put into a lot of pressure to make that account to come out of the stress stage. So it will become NPA after SMA 2. Here you have to see SMA 0, SMA 1, SMA 2. First 30 days from the due date, it is called as SMA 0. And SMA 0, it applies only to term loan and not for CC. SMA 1, that is 31 to 60 days, it applies to term loan and CC. SMA 2, 61 to 90 days, it also applies to term loan and CC. This is called as special mention. Before becoming an account as NPA, this special mention concept comes into the picture as per the RBI directions. Here, for easy understanding, I'll give a tabular form. The due date of the loan, that is before the day-end process, that is before running the day-end process, the due date has not been paid. So SMA starting date itself is overdue starting date is 31/3/25. You have to calculate 30 days, that is March 1 and 29th April, so 30. So the SMA 01 period starts from 31/3/25 to 29th April. Same concept applies for SMA 1, that is it starts from 34/25 to 29th May and 30th May to 28th June. That is SMA 2 period. And if the loan has not been paid on or before 28th June of 2025, then that account will slip into NPA on 29/6/25. This is a very, very important Excel working. Please go through it. So SMA 0, first 30 days, SMA 1, next 30 days, and SMA 2, next 30 days. So 90 days ends. So the 91st day, that account will become NPA. This is a SME working as per the RBI circular. And the chartered accountants have to give you a specific certificate with reference to SMA. Now we are going to the important basic thing. And if you classify one account as NPA, then that account ceases to earn income for the bank. That is, this asset includes the lease asset. Then after you classify that account as NPA, no further interest has to be charged on that account. And with reference to term loan, they are using the word overdue. With reference to CC, they are using the word out of order. So this is very, very important thing. And next one is How to arrive at the 90 days? This is also another basic thing. So an account is due on 5/4/19. If you add 90 days, that is April 1 and remaining days of April 30, so 25, so May 31, June 30, July 3, that is 90 days ends on 3/7/19. Suppose an account which is due on 5/4/19 has not been paid on or before 3/7/2019, then that account will become NPA on 4/7/19. Same is the case with other things. And if it is a leap year, that's why I have written this Excel chart. If it is a leap year, you have to add 29 days for the February. So this is also another very important thing, how to arrive at the NPA. This is also another working, that is a due, an amount is due on 5/8/21. It has to be paid on or before 2/11/21, where the 90 days ends, and the NPA date is on 3/11/2021. And here, this is also another very important, how they classify the NPA. In Companies Act, we used to see that total debtors, less bad debts, less reserve for doubtful debts, remaining is called as good debts. Here it is ulta. That is, good debts is called as standard, and reserve for doubtful debts have been divided into four parts: substandard, D1, D2, D3. So here they, for substandard, they mentioned the period as 12 months, because if an account has become NPA during leap year, then there is no day for the, that is, if it is 29 to 2020 now. So if it becomes NPA on 29 to 2020, that it will not be 29 to 2021. So they mention here as 12 months. For other things, D1, D2, D3, they mention 1 year. Regarding bad debts, that is, if there is no recovery towards load, then those accounts will be treated as loss asset. And here it's a very, very important date. NPA cutoff date for non-leap year. That is 1/1/26. Here, and a loan is due on 31/12/25. How to arrive at the 90 days? 31/12/25, 1, and January 31, February 28, March 30. So a loan which is due on 31/12/25, it has to be paid on or before 30/3/2026. That is, otherwise it will become NPA on 31/3/2026. For example, a loan is which is due on 1/1/26, the due date ends on 90 days ends on 31/3/26. So it slips into NPA on 1/4/2026, which goes to the next financial year. So you need not bother. So NPA cutoff date is 1/1/26. Here, any loan which is due or sanctioned on 1/1/26, you need not bother. Everything we have to classify those accounts as standard. So a loan which is due on 31/12/25, it will be due on 33/26. So it will become NPA on 31/3/26. So you have to calculate all the dues up to 31/12/25. So NPA cutoff date is 1/1/2026. So this is also another stage, how to arrive at the substandard period, D1, D2, D3. What are the other highlights in that RBI circular? That all the classification has to be done automatically by MIS and banks all. So that means whenever they have fed the master records correctly, then the system will take care. Few bankers, they change the due date in the master record to the next financial year. And whenever and wherever you are going for the bank audit, they used to say that the system takes care. System takes care. Yes, system takes care. But if they modify the due date from this current financial year to the next financial year, then system will never say that that account has become NPA. But they say that the RBI, with this latest thing, they say that all the classifications have to be done on automatic basis and no manual intervention or overriding is allowed. And if so, then the two officers of that bank has to get can do the modification, but they have to get the head office permission. This is a clear instruction given in the latest master directions. And master record has to be fed correctly. And the system audit, this is also another opportunity available to the chartered accountants who have cleared the DISA. That is, system audit has to be conducted every year by the internal or external auditors. So if you're qualified DISA or CISA, you will definitely get the system audit from the banks. Only few bankers they have got. Now it is made compulsorily by the Reserve Bank that system audit has to be conducted every year by the internal or external staff auditors. We are all called as external auditors. We will be getting the opportunities. And classification of NPA, that is the NPA has to be classified based on the recovery. Sometimes without recovery, if there is any change in status, that is, if they upgraded, that is wrong. So the classification of NPA should be based on the recovery. And now, another very important thing, you have to do the careful observation when an account is regularized near about the balance sheet date. Suppose for the entire that account will stand in the category of NPA. Suddenly there is a mass credit. Say if the loan amount is 10 lakhs to be paid, suddenly to regularize that amount, 10 lakh has come from another account. So that transaction you have to verify. Then you have to satisfy yourself that the money comes to regularize the NPA account is from the genuine source or not. Next point is so this is also another important thing. The NPA has to be calculated based on the borrower-wise concept and not on facility-wise concept. But here, a bill is discounted under LC and the borrower has got the amount from that bill discounting. And if that is the case, that bill discounting under LC, if any loan is received by the borrower, should not be classified as NPA, even though his other limits have become NPA. This is another very interesting observation they have given. And another thing, if the LC is not accepted, then regular norms of NPA is applicable. And here, for the term loan, they are using the word overdue. For the cash credit loan or overdraft, they are using the word out of order. And another very important thing that you have to see there, the NPA, that is NPA has to be done gradually. That is first year it is standard. If NPA is identified, then for the first 12 months, it will be called as substandard. Then for next 1 year, it is D1, then D2, D3. So downgrading should be there. Only for one situation, you can directly classify that account in as doubtful assets or loss assets in the case of erosion in property value. That we will discuss later. So you have to downgrade the loan gradually. And if you want to upgrade, so in case if the party has come to the bank and he has remitted the amount, then he wanted to upgrade his account, then you have to upgrade only to standard and not to other status. Suppose if an account has become D3 and the party has come and remitted some amount, so it should not be D3 to D2. And if at all they want to upgrade, the borrower has to pay all the dues as on date to the account. So from doubtful status, the upgradation is done only to the standard and it should not be from D3 to D2, D2 to D1. So that's a very, very important thing. So everything is based on the sanction letter. And now we are going to see the non-agricultural loans and particularly with reference to term loan, how we are going to discuss, how we are going to define the NPA. There are 5 methods of loan repayment with reference to term loan. That is principal plus interest, EMI, holiday period interest plus EMI, bullet repayment, and balloon repayment. If you understand the point number 1 and 2 clearly, then remaining 3, 4, 5 will be, you can easily understand. So from where we can identify this? That is method of repayment. Everything is based on the sanction letter. Please go to the sanction letter and read whether the repayment is being fixed based on the dues or based on the EMI. Let us go for the understanding of first method, that is term loan. That is principal separate, interest separate. So here, please go to the point number 1. That is serial number 1. Number of dues. Calculate the number of dues from date of sanction to 31/12/25. From date of sanction to 31/12/25, it is 50 dues. It is here in the first method, it is dues, due of the principal. So next one is what is it per due? It is 1000. So what is the due amount to be paid up to 31/12/2025? Because after 1/1/26, everything we have to treat it as standard. that is NPA cutoff date. So you have to calculate all the dues from date of sanction to 31/12/25, 50,000. And your number 4 is sanction limit. And you have to deduct the due amount from the sanction limit, that is 1,50,000. That is point number 5 should be the real outstanding. Should be the real outstanding. So 1,50,000 should be the real outstanding. And now we have to take the balance as on 31/3/2026. Why we have to take the balance? That is all the amount which they paid from date of sanction to 31/3/26. Why? That means the due up to 31/12/25 may be regularized on or before 31/3/26. So the outstanding balance as on 31/3/26 is 1,48,500. That means that is I'm talking about the first method. So in that case, the outstanding real balance is 1,50,000, but actual outstanding is 1,48,500. That means the borrower has paid some amount in advance. So that account has to be treated as standard. And point number 7, the outstanding amount as on that date is 1,53,500. That means instead of 1,50,000, the outstanding balance is 1,53,500. That means there is an arrear on payment towards the principal or interest. So 1,53,500. So that account has to be treated as NPA. So I'm just to pass on this chart and look into the working, then you can easily understand the how to arrive at the NPA with reference to first method, that is principal separate, interest separate. So this is based on the due concept. Next one is we are going with the EMI concept. So here you have to calculate the, and again I'm taking the first method. First method, you have to calculate the EMI from date of sanction to 31/12/25. It is 50. What is per EMI? It is 1,000. That is, what is the actual EMI to be paid up to 31/12/25 is 60,000. Point number 4. Now you go to the credit side of the borrower. You have to add all the genuine credit from date of sanction to 31/3/26. If it works out to 60,000, that means instead of paying 50,000, the party has paid 60,000. That means some amount he has paid in excess. So that account has to be treated as standard. Otherwise, it is NPA. In case if the amount is only 40,000, instead of 50,000 rupees due, the party has paid only 40,000, then that account has to be treated as NPA. So if you understand the first method and the second method, others are very, very easy. So we are going with the third method. So in that third method, only the holiday period interest is added. Point number 1. Holiday period interest, holiday period, gestation period, then the holiday period, gestation period are one and the same. So you have to add in this first exercise, it is 20,000. EMI due up to 31/12/25, 50,000. What is the total amount to be paid? Point number 5. What is the total amount to be paid is 70,000. And go to point number 6. From date of sanction to 31/3/26, the customer has paid 80,000. That means instead of 70,000, the borrower has paid 80,000. Then that account has to be treated as standard. And if it is 60,000, that means there's a shortfall in payment. Then that is with reference to point number 7. Then that account has to be treated as NPA. This is with reference to third method. So if you understand the first method and second method, third method is very, very easy. And fourth method of repayment is bullet repayment. In that bullet repayment, at one shot you have to make the payment. What are the loans that comes under the bullet repayment is JUL loan and FIT, funded interest term loan. So the edge is called as the due date. From the edge, you have to add 90 days. Within that 90 days, if the dues have not been paid, then that account has to be treated as NPA. This is with reference to bullet payment. Next one is called as balloon repayment. In that balloon repayment, the first year the repayment is very less, second year it will be more, and third year it will be more. It based on the funds generated from the project, they created the balloon repayment. And if you want to understand the balloon repayment, the principle of 1 and principle of 2, loan repayment, principle 1, principle 2 have to be applied. Then you can arrive at the NPA with reference to balloon repayment. This is what we have discussed about the term loan. There are 5 methods. One is about the principal plus interest. Second one is EMI. Third one is holiday period interest. And the fourth one is bullet repayment. Fifth one is balloon repayment. And every sanction, everything depends on the sanction letter. And in my experience, it's only my experience, few bank software, they will not consider the holiday period interest with reference to educational loan and housing loan. So please do the working very carefully, because of this, the system may say those accounts have standard, but according to me, those accounts will not be as standard, or it will be NPA. So this is only my observation, just I'm sharing my experience. Next thing that we have to go and see is the uh, cash credit loan. In cash credit loan, there are 8 methods. There are 8 methods to arrive at the NPA. Step one. In that step one, so far we have seen the term loan. Now we are going for the CC loan. In that step one method, on few days, the outstanding balance may exceed the sanction limit or may not exceed the sanction limit, will be below the sanction limit. So for easy understanding, I have taken the last quarter, that is 1/1/26 to 31/3/26. I have taken only the last quarter for easy understanding, but as a concurrent auditor, as a statutory auditor, you can do even for every quarter, but everything depends on the sanction letter. But I have considered only the last quarter. So here, step one and step three are one and the same. In step one, you have to add all interest debited in the account. Here, interest includes penal interest and not charges. You have to add all interest debited in the account from 1/1/26 to 31/3/26. Go to the credit side, add all credit into the account, you compare it. The credit should be genuine. If you compare it, if the credit exceeds the interest due, that means all the interest is serviced. No, it is that account has to be treated as standard. If the interest is not serviced, suppose if the credit falls short of the interest, that means some interest portion has to be serviced. So then that account has to be classified as NPA. And with reference to step three, the outstanding balance will always be below the sanction limit. The same concept as step one. Add all interest, go to the credit side, add all credit, compare it. If the credit exceeds interest, then all interest is serviced. So step one and step three are one and the same. With reference to step two, at least on one particular day during that quarter, the outstanding balance should be below the sanction limit. At least on one particular day, the outstanding balance should be below the sanction limit. So if that is the case, then that account has to be treated as standard. Otherwise, it should not be treated as standard. So suppose all the entire 90 days, if the outstanding balance exceeds the sanction limit, then that account you can classify it as NPA. And next one is based on the stock statement and based on the data statement, drawing power has to be arrived at. Here, for to arrive at the DP as per the sanction letter, as per the stock statement, please refer the sanction letter and also see the margin. The margin is the owner's contribution. The stock statement has to be submitted on monthly basis, half-yearly basis, or quarterly basis, or annual basis as per the sanction letter. And date of submission will be clearly mentioned in the sanction letter. And the party has to submit the stock statement to the bank, and the bank has to prepare a stock register based on the stock statement submitted by the borrower, and delay in submission of the stock statement will attract penal interest, and items must be tallied with the sanction. That is, if the loan is sanctioned for the purpose of furniture, all the stock should be related to the furniture manufacturing business, and sometimes the borrower may include the other business, say in the form of provision stores items, stocks will be included in the stock. So those stocks you have to exclude. Then branch manager has to go for the inspection after they receive the stock statement submitted. Then here LC stock should not be considered the stock statement, because LC stock, LC the proper, that is owner of the supplier of the goods. If they supply under LC, the ownership lies with the persons, lies with the supplier itself. So LC stock should not be included, and drawing power has to be arrived at accordingly. Then see the, with reference to data, you have to see the margin. Then age wise and customer wise, you have to get the list. Based on that, you have to do it. And sister concern debt should be excluded from the data statement. And you see that if there is any bad debts included in the stock data statement, that should also be excluded. And the CS certificate has to be obtained once in a quarter or half yearly. So this is also clearly mentioned in the sanction letter. And you have to analyze the bad debts. And here, for easy understanding, I have given in an Excel format. total stock is this, less auxiliary stock, less creditors, less LC stock should be excluded. Point number 3 is the eligible stock, and from that you have to deduct the margin. And that point number 5 is the drawing power. This is with reference to stock. And here I request the charter accountants who view this program, please pause the presentation and arrive and understand this Excel working. Then we are going for the drawing power with reference to data. Total book debts. Let's remove those data above 90 days or 125 days as mentioned in the stock statement, as mentioned in the sanction letter. Then that is called net book debts. From the net book debts, deduct margin of 40% and arrive at the drawing power. Then drawing power as per stock is there, drawing power as per the debtor is there, that is total drawing power you can arrive at. If the stock statement is in minus and debtor statement is in plus, you can net the figures also. So you have to compare the drawing power then with the outstanding balance. Now step 4 says that if the drawing power outstanding balance should be always below the drawing power. Otherwise, that if it is not there for a continuous period of 90 days, then that account will be classified as NPA. Outstanding balance should always below the drawing power. Otherwise, we can say that drawing power should not exceed the outstanding balance. So, another next step 5. Step 5 is that is limit is not renewed within a period of 180 days from the due date of renewal. So, a loan is due for renewal from the due date of the renewal. Within 180 days, the loans have to be renewed with reference to cash credit loan. If it is not renewed, then it is not a temporary deficiency. Then you have to classify that account as NPA. So this is very, very important. Here, during that 180 days, the bankers may give some temporary extension or ad hoc extension of the due date. Okay, everything is permitted within this 180 days and not it should not exceed 180 days. So here I will tell once again, a loan has to be renewed within a period of 180 days from the original due date and not from the ad hoc renewal date. So this point you have to bear in mind. And step 6, 7 and 88 are almost part of the earlier presentation. So here I want to go for the next thing. All the cash credit loans like packing credit loan, bill discounting, crystallized bills, LC, credit card, calculate from the due date of the payment, because the banks have made the payment from the due date, they have to calculate. Next one is, it's a very, very important thing. NPA has to be calculated on borrower wise and not facility wise. This is a very, very important thing. So one facility has become NPA. That means you have to classify the entire loans borrowed by the borrower as NPA. Next one is other important points of NPA is unrealized portion. That is, if you have classified one account as NPA for the first time, then you have to remove the unrealized interest. And after you identify one account as NPA, no further interest has to be charged. And the NPA date is very, very important. In case there is no DPN and no DPN is time barred, then the asset has to be treated as asset provided it is an unsecured asset. If there is a collateral property and EM is created, then you can wait. It should not be classified as loss asset. And another important thing is erosion in property value. In case suddenly after sanction of the loan, the collateral value has changed due to some erosion in property value, you can directly classify those assets directly as doubtful or loss assets. And point number 6, government guarantee given by the central government is not NPA, but with reference to state government, all the NPA IRAC norms are applicable. Then regarding consortium advances, the lead bank, that is one bank IRAC, that is NPA classification will not affect the other banks. So there are 4 banks. Suppose A bank has classified that asset as NPA, B, C, D need not follow. They have to do the working separately. This is with reference to consortium advances. And with reference to sublimit, you have to add all the limits of all branches, then arrive at the NPA. Next one is any advance against term deposits, NSE, KVPs, Indra Vakash Patra, NPA rules are not applicable. And agricultural advances affected by natural calamities, no reschedulement, that is even you have to do the reclassification, reschedulement, then you need not change the status. This is with reference to agriculture and non-agriculture. If you are done for any reschedulement, then regular IRAC norms are applicable. Next thing is with reference to here, advanced to staff normal NPA norms are applicable. It's a very, very important thing. Advances to staff regular NPA norms are applicable. Now, so far we have seen the NPA with reference to non-agricultural advances. Here we are going to see the agricultural advances. There are two types of agricultural advances. One is direct agriculture, and second one is indirect agriculture. And in that direct agriculture, crop loan concept is there. So for all indirect agricultural advances, regular IRAC norms circular available, that is more than 90 days norms are applicable. But for agricultural advances, I need 5 minutes of you. Then you can easily understand how to classify the agricultural advances. So NPA, if it is overdue for 2 crop season, that is called a short-term crop. And here crop season includes crop period, harvest period, and marketing period. So here we are going to discuss about the short-term crop. A short-term crop is a crop wherein the growth period is less than 1 year. So here 1615 to 31316. So the crop season has been clearly mentioned in the sanction letter. Even the due date is also clearly mentioned in the sanction letter. So here, as per the sanction letter, due date is 31/3/2016. So here from the due date, please concentrate, from the due date, add to crop season, which comes after the due date. Here, the due date is 31/3/26. Two crop season is 1616 to 31/3/17, 1617 to 31/3/18. So the due date of the loan for this loan is 31/3/18. That is a loan which is due on 31/3/16 has to be paid on or before 31/3/18. Otherwise, that account will become NPA on 1/4/2018. The rule is from the due date, add to crop season, which comes after the due date. And here, this is also another short-term crop example. Here, the crop season is 22/3/2023 to 18/10/23. The due date of the loan is 31/10/2023. Two crop season is 22/3/24 to 18/10/24, 22/3/25 to 18/10/24. The agricultural short-term crop loan due, how to calculation is from the due date, that is 31/10/23, add to crop season, which comes after the due date. So 18/10/25. So that means a loan which is due on 31/10/2023 has to be paid on or before 18/10/25. Otherwise, that account will become NPA on 19/10/25. So this is the thing you have to remember. From the due date, add to crop season, which comes after the due date. Same concept applies to long-term crop. From the due date, add one crop season. So 36/2016 is the due date. From add one crop season, it comes to 36/18. So an amount which is due on 36/16 has to be paid on or before 36/18. Then NPA date is 1/7/2018. So this is a very, very simple thing. Short-term crop, from the due date, add to crop season, which comes after the due date. Long-term crop, from the due date, add one crop season, which comes after the due date. So same thing is here. Here, the crop season end due date is something different. So for this, from 18/59/19, add one crop season, it ends on 6/9/2021. So due on 15/9/19 has to be paid on or before 6/9/21. Otherwise, that account will become NPA on 7/9/2021. What are the other highlights of agricultural advances as per the IRAC latest norm? So far, in earlier IRAC norm surplus, what are called as direct agriculture or agricultural advances eligible for IRAC norms or have not been defined. Now they have clearly defined here. Say, please refer the master directions. So these are the things: loan to individual farmers, that is group of individual farmers provided by the bank, provided the bank maintains disaggregated data of such loan directly engaged in agricultural only, and this shall include crop loan to farmers, then medium and long term to farmers for agriculture. Then here they say that purchase of agricultural implements and machinery and other development activities undertaken by the farm, loan to farmers for pre and post harvest activities. That is for spraying. They say that agricultural lands are there, but for the spraying cost, if they have given any loan, that will also form part of the direct agriculture, spraying, harvesting, grading, and transporting of their own farm produce. Next one is loan to farmers up to 60 lakhs. That is a pledge or hypothecation of agricultural produce, including warehouse receipt for a period not exceeding 12 months. Next one is loan to distressed farmers indebted to non-institutional lenders. Suppose if they want to make the farmers to come out from the clutches of non-institutional lenders, if the any loan is given by the bankers to the distressed farmers, then they are also to be classified under the category of agricultural advances. Loan to farmers under KCC, loan to small and marginal farmers for purchase of land for agricultural purposes. So if any loan is sanctioned to the small and marginal farmers for the purchase of agriculture purposes, land for the agriculture purposes, they are eligible for the agriculture. This is the latest thing they have included. And marginal farmers, they are called as those farmers who are having 2.5 acres of land, and small farmers, they are having 5 crores, up to 5 acres of land, they are called as small farmers. And another thing is loan to corporate. Now, so for individual, now we are going for the corporate farmers, producers, organizations, companies of individual farmers, partnership firms, and cooperative societies directly engage in agricultural activity only up to an aggregate limit of 4 crore per borrower. And this shall include crop loan to farmers, which shall include traditional, non-traditional plantation and agriculture, medium and long-term loans to farmers for agriculture. And another important thing is loan to farmers for pre and post-harvest activities. That is same thing which they have given in the individual, spraying, harvesting, sorting, transporting. And loan up to 2.5 crore against the pledge and hypothecation of warehouse receipts for a period not exceeding 12 months. Then loan to PACS, farmers service societies, and large size Adivasi multi-purpose societies, LAMPs, or online lending. And another one is other agricultural named advances, regular IRAC norms. So only those agricultural advances mentioned in this circular are called as agricultural advances. Other than this, they are classified as other non-agricultural advances. They will be classified as per the regular IRAC norms, that is 90 days concept. And natural calamities, if it is announced by the government and is applicable only for that area. And if there is any conversion or reschedulement of agricultural loan due to natural calamities, if there is any reschedulement, then the regular status continues and you do not classify that account as NPA. For others, if there is any reschedulement done to the existing assets, then you have to apply for the next status. If any reschedulement is done to the standard asset, then that asset should be classified as substandard. And another very important thing, repayment schedule in the case of rural housing advances granted to agriculture under Indira Awas Yojana, Pradhan Mantri Gram Awas Yojana, and Golden Jubilee Rural Finance Scheme. The bank shall ensure that the inter-installment payable on such advances are linked to crop cycle, that is short term and long term. Now we are going to see another area. So far we have seen the agricultural advances NPA classification and non-agricultural loan classification. Okay, now among this you have identified one account as NPA. So if you identify one account as NPA, you have to remove the unrealized interest from that account. So those interests are not eligible to be added to the profit and loss account. So remove those unrealized interests, and they say that this unrealized interest includes commission, fees, expenses of the past period. It is not previously, it was only 2 years they calculated. Now they say that it is past period, and to arrive at the credit, you have to consider only the genuine credit. Here it's a chart. There are 3 methods. Unrealized one URI method 2, URI method 3. Here I have considered only 2 years, but the circular says it is past period. That is from date of sanction to till date you have to do it. And that interest includes fees, commission, charges, etc. So interest debited, I am taking the URI for the first method. 24-25 interest debited is 48,070. Amount paid into the account for the year 24-25 is 22,640. There is a deficit of 25,430. That is, this interest has not been actually realized. This is called as unrealized interest, but it has been given credit to the P&L. So you have to remove it because this is not a genuine credit, genuine interest. So 25-26, there is a deficit of 20,638. So there is no surplus. So the unrealized interest for the year 24-25 is 48,068. This is under the first method. And the second method, 24-25 has got deficit of 25,430. 25-26 has got a surplus of 31,962. So you can adjust the debit shortage of 25,430 interest in the surplus of 31,962 because the party has paid more amount. So in this method, second method, there is no unrealized interest. So the surplus of 31,962 you can adjust and eliminate 25,430 interest which is due in the last year. Now we are going for the method 3. In that 24-25 has got surplus of 6,010. But 25-26 has got a deficit of 22,638. So this 6,010 would have been adjusted in the principal. So there is no surplus available in the year 24-25. So the unrealized interest for the year 25-26 is 22,638. So first method, both years have got unrealized interest. That 48,068 you have to remove from the profit. Second method, there is no unrealized interest because current year surplus, last year deficit, you can adjust against the current year surplus in method 2. In method 3, last year has got surplus, this year has got deficit. You cannot adjust the last year's surplus with this current year deficit. So the journal entry of removing this is debit interest, credit the borrower. So when you pass the entry, debtor account debtor to interest. When you want to remove the interest, you have to debit the interest, credit the customer, credit the borrower. So this is with reference to unrealized interest. Another important point that is there stated in the circular is erosion in property value. So when they receive the loan, says in one of my clients' case, 87 lakhs loan has been received and the property is valued around 1 crore 25 lakhs. So after 3 years, due to railway land acquisition, the track comes in the middle of the land and it bifurcates the land into 2 parts. So frontage is reduced and for the backside there's land is there, but to reach the backside land, you have to travel 4 kilometers. The value of the land for the backside land they mentioned as 3 lakhs, and frontage they mentioned as 2 lakhs. So in total, the property value is 5 lakhs. So at the time of giving loan, the property is valued around 125 lakhs, whereas as per the present trend, the property value is 5 lakhs. That means which is less than the 10%. So we can directly take that account into loss asset. Here, in this chart, property value at the time of sanction is 4 lakhs, 40 lakhs, and present value is 18 lakhs. That means it is 45%. If there is any reduction between 50 to 90, that is, we can say that 10 to 50 reduced now, you can directly classify that account as D3. And if the value is less than 5%, less than 10%, you can directly take into loss asset. This is also another very important thing with reference to erosion in property value. We are coming to the last session of the presentation. So this is a raw technique. This is not a foolproof technique. For easy understanding, I am going to tell you the method of NPA classification with reference to Baba Mutra. So this is with reference to Baba Mutra. It's a very easily you can understand the Baba Mutra. Even a person without having any knowledge of NPA, you can easily identify NPA, but you have to satisfy yourself whether these are applicable to the IRAC Norms rules. So left hand, date of sanction, due date of the sanction. Date of sanction, due date of the sanction. If you go to the outstanding balance, if there is any outstanding balance, then there is beyond the due date of the sanction, then that account you can classify as 90 as NPA. But you have to consider 90 days from the due date and 90 days. In spite of 90 days, there is an outstanding balance. Then you can classify that asset as NPA. Go to the right side, loan amount sanction and outstanding amount. If the outstanding amount exceeds the loan amount, then that account has to be treated as NPA and provided 90 days terms. So loan amount sanction, outstanding amount. If the outstanding amount exceeds the loan amount, then that account has to be treated as NPA. So it's only a raw technique. It is not a foolproof technique. For easy understanding, I have given this method. And this is what I want to say today about the latest IRAC norm circular. It's the latest version. It is, and this is effective from 28/11/2025. Thank you very much for patiently watching this program. You are welcome for any doubt. I have given already a mail ID. You can call me or you can send the mail to me. I'll be very happy to explain to you. Nandri, vanakkam.